When you think of cryptocurrency, the vast and ever-evolving world of digital assets probably comes to mind. It's a landscape filled with innovation, volatility, and the promise of a decentralized financial future. But amidst the thousands of cryptocurrencies and blockchain projects, a few key players stand out, shaping the way people interact with this technology. Two names dominate: Binance and Coinbase. These are the financial powerhouses, the titans of the crypto exchange world. They've become synonymous with buying, selling, and trading digital currencies for a global audience. The main entry points for millions to buy, sell, and trade digital assets. They offer a wide array of tools and services catering to both seasoned traders and newcomers alike. Their model is simple: provide a trading platform, a secure and user-friendly environment where buyers and sellers can connect. Take a fee, a small percentage of each transaction, which adds up to significant revenue given the massive trading volumes on these platforms. And keep the wheels of the crypto economy spinning. They are essential infrastructure, facilitating the flow of capital and enabling price discovery in the digital asset markets. But there's a third player quietly rewriting the rules, a project that challenges the conventional wisdom of how cryptocurrencies should be distributed and adopted: Pi Network. Pi isn't a traditional exchange. It takes a completely different approach to the crypto space. You can't buy or sell crypto there, at least not yet. Its focus is on something far more fundamental. Instead, Pi is about building a global community, fostering a sense of shared ownership and participation in the network. Distributing coins through mobile mining, making cryptocurrency accessible to anyone with a smartphone, regardless of their technical expertise or financial resources, and focusing on mass adoption before value. The idea is that true value will emerge once a critical mass of users are actively engaged in the Pi ecosystem. So this isn't just a comparison of three companies, it's a clash of ideologies. It's a look at different philosophies on how to build a successful cryptocurrency and a thriving digital economy. Are Binance and Coinbase the future of crypto, the established order that will continue to dominate the landscape? Or could Pi's grassroots approach, its focus on community and accessibility, create a new kind of digital economy? A more inclusive and decentralized system that empowers individuals around the world? Let's break down how these platforms work, examining their underlying technologies and business models, who uses them, understanding the demographics and motivations of their user bases, and what their futures might hold. What are the long-term prospects for each of these platforms, and what role will they play in shaping the future of cryptocurrency? So, what exactly is Pi Network? It's a question many are asking as they encounter this intriguing digital currency project. Let's delve into the core concepts and understand what sets Pi Network apart from other cryptocurrencies in the digital landscape. At its core, it's a digital currency project, but it's more than just another cryptocurrency. It represents a vision for a more inclusive and accessible digital economy. The project aims to create a cryptocurrency that can be mined and used by anyone with a smartphone, regardless of their technical expertise or financial resources. Aiming to make crypto accessible to everyone, breaking down the barriers that often prevent mainstream adoption. Pi Network seeks to empower individuals worldwide by providing them with a simple and user-friendly way to participate in the digital currency revolution. Unlike Bitcoin, which requires expensive hardware and significant energy consumption to mine, making it inaccessible to many, Pi lets you mine coins directly on your smartphone, offering a more sustainable and accessible alternative. This innovative approach eliminates the need for specialized equipment and reduces the environmental impact associated with traditional cryptocurrency mining. The app is designed to be lightweight and efficient, ensuring that it doesn't drain your battery excessively or use heavy computation, preserving your phone's performance and usability. It runs seamlessly in the background without impacting your device's overall functionality. Instead, you simply check in daily with a tap of a button to prove you're a real person and actively participating in the network. This verification process helps to maintain the integrity and security of the Pi network. Pi uses the Stellar Consensus Protocol, a more energy-efficient and scalable alternative to traditional proof-of-work systems, relying on a network of verified users, known as security circles, to secure the system and validate transactions. This decentralized approach ensures that the network remains resistant to fraud and manipulation. You can boost your mining rate and earn more Pi coins by inviting trusted friends and family members to join the network, creating a web of real, interconnected people who contribute to the network's security and growth. This social referral system encourages community building and fosters trust among users. The primary focus of Pi Network is on building a massive, global community of engaged users before assigning any monetary value to the coin, emphasizing the importance of utility and adoption. The value of Pi will ultimately be determined by the size and activity of its user base. Pi is designed as a social network first, fostering connections and interactions among its members, and a financial network second, aiming to facilitate secure and seamless transactions within its ecosystem. In essence, you're trading a few seconds of your time each day and leveraging your existing social connections, building a trusted network, for a stake in a possible future currency that could potentially revolutionize the way we interact with digital finance. This approach presents a stark contrast to buying established cryptocurrencies on exchanges like Binance or Coinbase, where you directly invest money for established digital assets with existing market value and trading history. With Pi, you're primarily investing your engagement, your belief in the project, and your hope for future value, betting on the potential of a community-driven cryptocurrency to disrupt the financial landscape. It's a long-term play, focused on building a strong foundation for future growth and adoption. The biggest controversy around Pi Network? You can't sell your Pi coins. You can mine and transfer them within the network, but you can't cash out on exchanges like Binance or Coinbase. That's because Pi is in its enclosed mainnet phase, a walled garden, intentionally cut off from the wider crypto world. The core team believes listing Pi too soon would invite wild speculation and price crashes, undermining the project. Instead, the focus is on verifying users through KYC and encouraging developers to build real-world apps that use Pi. The goal: create utility and a real economy before opening the doors to trading. This no-sale period is a protective measure, not a flaw. Only after Pi has real use cases and a strong community will it connect to the broader crypto market. It's the opposite of the usual list first, build later approach. Is this no-sale period good for Pi's community? For many, it's frustrating to see coins accumulate with no way to cash out, but this delay forces users to focus on what they can do with Pi, not just its dollar value. It encourages building local marketplaces and real-world use, not just speculation. The result? A more committed long-term user base, people who believe in the vision, not just a quick profit. This walled garden gives the team time to build infrastructure and apps without the pressure of a live market price. It's a filter for true believers and a sandbox for development. If Pi had launched on exchanges from day one, every hiccup could have been fatal. The delay might just be the project's smartest move. User numbers tell a powerful story. Coinbase has over 110 million verified users. Binance, more than 170 million. These are active traders, moving billions in daily volume. Pi Network, despite having no tradable coin, claims over 55 million engaged users. That's massive, achieved through viral, word-of-mouth growth, not billion-dollar marketing. But there's a key difference. Binance and Coinbase users invest real money. Pi users invest time and social capital. Over 10 million Pi users have completed KYC, but their financial commitment is minimal. Pi's growth is steady, especially in developing countries where traditional finance is out of reach. If Pi can turn its huge user base into an active economy, it could trigger one of the biggest network effects in crypto history. The potential is enormous, but still just potential. The real test is turning users into participants in a real economy. Crypto's biggest barrier? Complexity. Binance and Coinbase can be intimidating. Charts, jargon, and the need to link a bank account. That excludes billions, especially the unbanked. Pi Network flips the script. All you need is a smartphone and a daily tap. No money, no technical knowledge, no risk. This simplicity opens the door to students, small business owners, and grandparents worldwide. People untouched by traditional crypto. Pi's message is clear: join now, for free, and you'll have a stake in a future digital economy. Of course, Pi's features are basic compared to full exchanges, but for mass adoption, simplicity is a strength, not a weakness. Pi's approach could finally make crypto truly global and inclusive. Sometimes, less really is more. How you get crypto on these platforms reveals their philosophies. On Binance and Coinbase, you buy crypto with fiat money. Simple, but only if you have capital. Advanced users can stake or yield farm, but it all starts with money. Pi Network turns this on its head. You earn coins by participating and verifying you're human. No money required, just engagement and trust. This democratizes currency creation, making it accessible to anyone with a phone. Traditional exchanges favor the wealthy. Pi aims for a level playing field. Binance and Coinbase are efficient marketplaces for existing value. Pi is about creating and distributing new value, betting that mass adoption will drive future worth. Two systems, two visions, one for traders, one for builders. The question is, which model will shape the next era of crypto? Early adoption is always a gamble, and Pi Network is no exception. The biggest risk? Pi might never gain real value, and years of daily taps could amount to nothing. The project is still centralized, with the core team holding the reins. Trust is required. But the potential reward is huge. If Pi succeeds, early adopters could hold a valuable asset, all for free. Imagine mining Bitcoin on your phone in 2010. That's the dream Pi is selling. If Pi apps take off and real transactions happen, demand could soar. Beyond money, early adopters are part of a global experiment in building a new kind of currency. The risk is time. The possible reward is a place in crypto history. For millions, that's a bet worth making. So, after all the data, the charts, and the comparisons, what's the verdict? How do these platforms stack up after comparing Binance, Coinbase, and the intriguing Pi network? We've looked at their features, their user experience, and their potential for the future. Binance and Coinbase stand tall as the polished giants of today. They represent the current standard in the crypto exchange world. They are efficient, demonstrably profitable for many users, and their reliability is proven through years of operation and countless transactions. Pi Network, however, is a bold bet. A gamble on a completely different approach to cryptocurrency. It's a bet on a different future, one where accessibility and ease of use trump complex trading interfaces. Pi Network is banking on value derived from mass adoption and real-world utility, creating a digital currency that's actually used in everyday transactions. Their focus is on building a functional ecosystem, not just fueling speculative trading frenzies. The enclosed mainnet, while seemingly a delay, is a calculated one. It's a strategic move aimed at protecting the project from early volatility and forcing a concentrated focus. The goal is to prioritize building a robust and usable platform, not just encouraging rampant trading and speculation. This deliberate strategy has already built a massive and engaged user base. And it's fostered a community that prioritizes utility and real-world applications before simply chasing after price fluctuations. If it all works according to plan, Pi has the potential to onboard billions of users worldwide. That's billions of people, many of whom have never even touched cryptocurrency before, suddenly entering the digital economy. But make no mistake, the transition to a fully open market is inherently risky, and despite the careful planning, ultimate success is far from guaranteed in the volatile world of crypto. Binance and Coinbase represent the natural evolution of cryptocurrency exchanges. They are the established players. Pi Network, on the other hand, boldly aims for a complete revolution in how cryptocurrency is distributed and used. So, whether Pi's calculated delay proves to be a stroke of genius or a fatal flaw in their plan, one thing remains absolutely certain. Millions of people are watching with bated breath, waiting patiently, and tapping diligently on their phones each day. They are all hoping to be a part of the next big thing, a part of the answer to the question of crypto's future. The next chapter in the ongoing story of cryptocurrency could very well be written not by the established exchanges and institutions, but by the collective power of the crowd.